Hi there, this is Adam Walkham from Permanent Wealth Partners. I wanted to come back to a topic that I've discussed a lot recently, and it's a topic that is really highly relevant for everybody, and that's inflation. And one of the regular questions I get asked is like, how high can inflation go, and where do we think inflation is going from here? And there's a source that I use that I think is really interesting and relevant, and it's free and it's available for everybody to look at. So I can just show you it on screen now. If you look at, it's called Truflation, so it's truflation.com. So Truflation is an independent company which has looked at the historical measure of inflation, which is Consumer Price Index, or CPI. Their view, and I share their view, is that the way CPI is calculated is exactly the same way it's been done for 40 or 50 years, and that's a random selection of surveys are sent out to a number of people, and then also they get some basic pricing data which is collected by the government. Nothing has changed in the last 40 or 50 years. Truflation thinks there's a better way to calculate prices using this wonderful thing called the internet, and the fact that the internet has a lot of prices. And so Truflation's I guess, view and their business model is they collect around 10 million different data points on prices across the web with a bunch of different online sources, and to try and create what they view as a far truer reflection on inflation going on at the moment. And it what actually creates two really interesting results, which I just want to run through with you now. And these really kind of drive to actually say what is really happening with inflation. So the first one you can see on your screen is the US inflation figures. And so if you see here, the government reported rate, so that the official rate of inflation in the US is 4%. Now that was 4%. I think that was from last week. That was down from 4.9% the month before. So it's definitely coming down. The actual or real or live inflation figure, according to Truflation, they believe it's around 2.5%, so lower than the actual real inflation number, or sorry, than the reported inflation number. The reason why it's lower is because, well, simply it backs up why Truflation exists, is because the reported number has a lot of lags in there. That it has what they call services and housing costs in there, which generally are known to have a 6 to 9 month lag, and that impacts the figure. So Truflation believes the real level of inflation in the US is actually only 2.5%. And you can see the 1 year chart on this is really for the last 12 months, has gone in one direction. So it was up at 12% back in June, July last year, continuing all the way down to just above 2% or 2.5% now. So really interesting. So good, it's good news because inflation is lower than expected in the US. And as we all know, the US is the biggest economy in the world. The US consumer really kind of drives the global economy, and also the input prices that go into this inflation figure are generally global input prices, things like oil, commodities, things like that. So that's the good news. So inflation in the US does seem as though is lower than it actually is. Now, whilst the good news, as ever, I've got to balance it with the bad news. And the bad news is, so Truflation collects data in the US, it also collects data in the UK. This is a shocker. So the UK, the government reported rate is 8.7%. The real rate, according to Truflation, is above 13. So instead of being lower, it's way higher. Which is really interesting. And you look at the 1 year chart on that, and instead of, remember, in the US, it started high and kept going all the way down. So the UK, it jumped in July last year. And if you remember what happened in July last year, this was the energy price cap was increased. That's what that jump reflects. And then subsequently, as we got the higher energy costs and higher inflation figure, that started to feed through to the rest of the economy. And we peaked out with an inflation figure of around about 20% over sort of Christmas time. So that's a massive number. The only sort of light in the around the clouds on this one is the fact that since then it has started to come down and is coming down quite quickly. And so what and we're now around this sort of 13%. Now, coming up in July, we're going to get, again, the energy price cap is going to come down. So with this, we had this spike last July. We should get an equivalent spike lower in this coming July, which should push this down below 10% finally, and that should then continue to fall. But I think when we think about inflation, what is really, really interesting is why is inflation and I wish the Bank of England would understand this more, is the kind of network effects of higher inflation, higher CPI figures equals inflation. And the simple way to think about this is just think about, I don't know, your phone contract or your broadband contract. All of these generally have an inflation figure. So your contract will be RPI plus 2% or CPI plus 2%. So guess what? The higher the CPI figure is caused by the jump in energy prices, it pushes all the other prices up. It pushes up wage negotiations, it pushes up everything. And that's what we saw in the UK, really in a unique basis over the last 6 months of last year versus what the US dealt with, which dealt with far earlier. So, bad news, UK inflation still is much higher than the US and still much higher actually than what is reported in the government statistics. The good news is that figure is coming down. It's just going to take a lot longer to come down. So look, I hope that's helpful. I hope that helps answer your questions in terms of when you think about inflation. If you've got any questions, always feel free to get in touch. Thanks.